Hi everyone, and welcome to this video where we'll cover how to visualize the return distribution in an investment portfolio by creating a histogram for each of the assets. Understanding the return distribution of your portfolio is essential for making informed investment decisions. It tells you whether your portfolio is skewed towards high risk, high reward assets, concentrated around steady, predictable returns, or experiencing excessive volatility. A histogram is a type of chart that can help with this. In simple terms, it groups data into intervals and displays how frequently each interval occurs. We have two input sheets here, colored dark blue, and this is the output sheet where we will add our histograms. And we have 6 fictitious securities in our portfolio, and here we show the daily prices for each one from the start of 2017 to the end of 2022. And the first step will be to calculate the daily returns for each of the securities in our portfolio. To do this, we can go into the Returns tab. The way to calculate the returns is to take the new or current day's return minus the previous day's return and then divide this by the previous day's return. We can then apply this formula to all securities and all dates. Once we've done this, our data is ready to create our histograms. To do this, let's select the whole column of returns for security 1, and then go into the Insert tab, select More Column Charts, and then select the histogram option. We can then click OK, and we can click Ctrl X or Cut, and then paste this into the histogram sheet. What we can do next is change the chart title to Security 1. We can also change the axis, so we can right-click the axis, click Format Axis, and select a consistent number of bins, so we'll adjust this to 10. We can now apply the same chart to the other securities as well. The only difference now is changing the data. We can change the data by right-clicking the chart, clicking Select Data, and then simply changing this to column C as follows. And we can then relabel this as Security 2. Once again, we can adjust the number of bins by clicking Format Axis, selecting Number of Bins, and then selecting 10. And then finally, the same process for Security 3 as well. Let's this time change the name first. And then let's right-click, click Select Data, and instead of B, this will become D. And finally, we can adjust the number of bins again. Let's now make some general observations. We can see all 3 histograms exhibit a roughly symmetrical bell-shaped curve, resembling a normal distribution. This indicates that the majority of returns are concentrated around the mean, with fewer returns in the tail. The highest bar in each histogram represents the mode, the most frequent interval. For security 1, this is around 0.2%. For security 2, it's closer to 0.6%. And for security 3, it's around 0.3%. The width of each histogram reflects the spread or volatility of the returns. Security 2, as we can see, has the widest distribution, with returns ranging from minus 3.9% to 3.5%, indicating it is the most volatile of the 3. Meanwhile, Security 3 has the narrowest distribution, with returns between minus 1.5 and 1.5%, making it the least volatile. Therefore, Security 2 offers the potential for higher returns, but also comes with higher risk. Security 3 is more stable, with low volatility, so may be better suited for risk-averse investors. So that's how you can visualize return distributions using a histogram in Excel and interpret the results. Please give this video a thumbs up if you found it useful, and subscribe to the Excel Hub for future Excel tutorials, techniques, and examples. Also, please see the description below to access templates featured in the Excel Hub tutorials.